Today, we're going to watch a video about the best trading concept ever, and you might be able to find big moving stocks just like this after the information that you hear. So we're going to be playing big money bingo as well, and the only way to win is put hashtag outlier in the chat. So let's watch this best trading strategy concept ever video together.
With the channel will know that I'm not a fan of the buy and hold approach for singular stocks. Although holding indexes, ETFs, and other diversified funds for the long term can be a viable approach. In this video, we look at an example of a popular stock which would have made it into the hands of the long-term investor, but with a disappointing ending. We not only look at the behavioral aspect of the chart, but we also look at the metrics such as return on risk and the impact of leverage. Let's look at the stock, Zoom Video Communications. Zoom became very popular during the pandemic, making it easy for people working from home to communicate. This newfound popularity soon became reflected in the stock price, and we can see here just how much the stock increased by. From February 2020, the Zoom stock price moved from approximately $90 all the way up to a high of $590 in a matter of just 36 weeks.
And that, right there, that's the big stage 2 uptrend that everybody's after. That is exactly the part of trading that everybody and their mom is clamoring to be a part of right there. So yes, that's exactly what you want.
An increase of over 550%. However, the stock price soon recalibrated over the next 18 months and has since returned back down to pre-pandemic levels.
Remind you of anything? Remind you of anything?
Here lies the issue with buy and hold. During the 18 months since the all-time high, not only did the long-term investor endure a huge decline, but they suffered from opportunity cost, the cost of having their capital locked up and thereby losing any opportunity to invest in anything else during that time.
So this is a really important concept here. Yeah, definitely looks like the market cycle. Yeah, but you didn't say it yet. He didn't say it. I'm not going to give it to you yet. Maybe he'll say it. If he doesn't say it, I'll definitely give it to you. But that's a really important concept right here, right? The opportunity cost that you are locked into this trade because it should go back up. It has to go back up. It went up in the past. It's still a great company. Their product is still amazing. All these justifications that you can come up with to say the stock price should do what you are telling it to do, rather than you listening to what the stock price is actually doing and then getting out of the way when it's trending down. I think that's a really important concept here, and I'm glad that he's mentioning it.
Before we look at the alternative method, let's look at how and why examples like this are frequently seen in the market. Price chart.
I've never seen anything like that before. Never once ever in the history of this YouTube channel have we ever looked at anything like that before. Again, I'm going to try and do something, see if it works correctly. Oh, this is going to work correctly. Excellent. Now I can have the same PowerPoint up twice. Perfect. Excellent. I have never seen anything that ever looks like this ever before, ever in the history of time. This is so weird. This is so weird.
Charts are highly correlated to the behaviors and psychology of the individual.
And I've shown you this time and time again. And for those of you who are watching and new to the channel, this is a really key point of trading. This is called the market cycle, where stage 1 is your sideways consolidation trend. Stage 2 is the big, beautiful uptrend that everybody's after. Stage 3 is a topping pattern where all the moving averages start crossing over. So you actually can figure out when it's trending up, when it's trending down, and when it's not working anymore. And then stage 4 is the big, scary decline. Okay. This right here is not just theory. This is reality. And that's what's really cool about what we talk about on this channel. Many other channels might talk about, the theory of trading or whatnot. This is so real. This plays out on every stock, right? People get more greedy. It pushes the price up. And then at some point in time, there's not enough greedy people to hold up the stock price anymore. And then those people turn fearful, which is what pushes the price back down.
After all, prices are moved by the buying and selling action of everyone involved. The theory represents the action of a bubble and can be seen across many different assets, not just stocks. Ultimately, the profile is driven by investor enthusiasm, which eventually leads to greed, followed by denial, fear, and eventual capitulation. Within the charts, we can also categorize the individual groups: For example, here we call the region smart money, where smart investors identify.
I don't actually know if he's going to say market cycle, but I'm going to say market cycle. There you go. There you go. You all get the B5 already. I got you. I got you.
A change in economic fundamentals. And here we have the institutional investors, usually banks and hedge funds, slowly accumulating positions. And next we have the general public.
Okay, now here's the deal. I don't want you to feel like you don't get to qualify yourself as smart money or institutional. If you hold stocks, if you are investing, you are a fund manager. You get to decide how you act as a fund manager. You can act like you can act like the dumb money, or you can act like the smart money. So what I want to do is I want to show a few examples of real life market cycles, right? I've shown you this example many, many times already, but Tesla. Tesla is a perfect example of a market cycle stock. This went up 130 something percent, and 100% of that gain evaporated. It evaporated. We can go to Cake. The Cheesecake Factory is in the middle of a stage 4 downtrend right now, right? How do we know what this looks like? Let me take off order blocks so it's a bit easier to see. Just a moment here. Show hide order blocks. There we go. All right, so looking at this, right? Your 10 going over the 20, price going over the 50. Always, 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 because it's just math, is the beginning of an uptrend. Now, sometimes the uptrends are short and they come right back down. Okay, sometimes they're short and they come back down. Sometimes they're short, sometimes they're medium and they go for a while. Sometimes they're short and they come back down. But sometimes they're huge and they run like crazy, and they'll go from $49 up to $65. It's like a 50% gain. Or in Tesla's case, going from $228 all the way up to $484, right? It always starts that way. And that is the same spot right here. Smart money and institutions. That is the same spot. Your job is to recognize when that is happening. Now, again, not every time the bullish setup crosses will the results be a huge move. And so I wanted to highlight these 3 points right here, because the setup is always the same. The setup, the 10 over 20, price over 50, is always the same. However, the outcome at the end of the setup, that is the part that we do not know. That part will be randomized. That part could be a nice small win. It could be a break even or even a small loss, or it could be a giant win. The outcome at the end of the signal is an impossibility to know. But every time that this starts, it always starts the exact same way. Everybody got it? Rocket Lab. Let's go look at Rocket Lab. Okay, LB. There you go. Market cycle, right? In fact, this is a really good example. Just because it pops up, does the market cycle and comes back down, doesn't mean it'll go all the way back down to zero or wherever it started from, right? It can cycle itself up multiple times, right? Cycled up a little bit higher, stage 2 right here, a little bit higher, stage 2 again right here, and then back down. Now, you can time the market. Now, this is super controversial, super, super, super controversial, but it's honestly not as hard as you think. Again, using the 10 over 20, price over 50, boom, that'll get you on the right side of the trend. And then when the 10 goes under the 20, price goes under the 50, boom, that is a bearish trend. Now we look at the S&P 500 right now. 10 over 20, price over 50, ran for months from May until November. We got the sell signal right here, and now it's trending down as well. Now it's trending down. But the deal is, just like to the upside, we don't know if this will result in a huge crash. We don't know if this will result in a small 5% pullback. We don't know where it's going to go. We do not know that. We just can see which direction it's going. Pretty easy, right? Pretty easy. Now, I've shown this many, many times, and I'll show it just again to prove out the point. It always works this way. I will go to the COVID crash, 2020, 02, 01. Okay. I will go with the COVID crash and show you right there. 10 under 20, price under 50 before the 35% sell off. I will go to the 2000, 01, the 2000 crash, the dot-com bubble bursting right there. Okay, right there. Right? What happened? Oh, let me zoom out a little bit. Let me zoom out a little bit. Huh. Even the market can do the market cycle. Anyways, when it started trending down, your 10 went under the 20, price went under the 50. I will go to the October 1987 crash, where it was the greatest stock market decline in history. And, oh, that was 1994. Yeah, where'd it go? Oh, SPY. And I got to go to SPX on that one. 1987, 1001, go to, there we go. The greatest stock market crash in history in 1987 had exactly this happen. 10 under 20, price under 50. So this is why I'm trying to tell you. You can tell which direction the market's going. You can tell the stock, you can tell the sector, you can tell the market. Okay. You don't get to tell the market where it is going to go, but you can listen and you can see, oh, you know what? It's trending down or it's trending up. And every single time it's crashed up or it's crashed down mathematically. And this is why I can say this without any sort of disclaimer. Mathematically, the 10 goes under the 20, price goes under the 50. Mr. Queller's a new viewer from Germany. Really appreciate all the input. Great work. Great work to you, Mr. Queller. Great. I'm super, super glad you're here. So yeah, I just wanted to point that out. Okay. So going back to this, before the big nasty move down happens, what do you think you can do? Type in the chat. Before the big nasty move down happens, before you get your money locked up for years, because let's go to a Bank of America. Let's switch to the weekly chart. And in the chat, go ahead and tell me, what can you do as an astute investor to make sure that you're on the right side? Look at this, Bank of America. From its crash in November of 2006, just now is getting back to break even. Now, I know a very common question is, well, what time frame? It doesn't matter. Oh, wait. It doesn't matter what time frame you want to put it on. It can be on the daily, weekly, monthly, 5-second, 4-minute, doesn't matter, because in that time frame that you're looking at, it will show you the direction in that time frame. Pretty cool, right? Pretty cool. But yeah, listen, you're totally right. If this is happening, you can go and sit in cash and don't F up. Precisely. Sit in cash and don't F up is a lifestyle, okay? Sit in cash and don't F up is real, okay? Because imagine if you just went to cash and didn't F up, you would have basically 20 years. Let's say the only stock you ever invested in, you're like Bank of America or nothing. Fine. I'm a long-term Bank of America investor. Fine. If you went to cash right here, you would have completely avoided how big of a decline? How big of a stage 4 decline? Yeah, I can't even see it. Oh, good gravy. A 95% decline. A 95% decline on your stock price. What do you want to bet how much that is to get back up? Let's see. A 95% decline to get to the same spot is only a 1,800% increase. That breaks brains right there, but it's the truth. A 95% decline took an 1,800% increase to get back to break even. Oh my good gravy. All right. So let's say that you are an investor who's like Bank of America or nothing. Sure. Get out of the way on its way down. And we're only going to look at the weekly candles here just to make it simple. You could get in right here, price over 10 over 20, price over 50. And like I say many, many times, and you got to get used to this, is that we don't know when this pops over how much we're going to make. So you might make a buck or lose a buck. Get out of the way. You might make a buck or lose a buck. You get out of the way. You might make a buck or lose a buck. You get out of the way. Again, you might make a buck or lose a buck, but you get out of the way. Then over here, you're going to make so many bucks. You're going to go from $8 to $16. You're going to double your portfolio. Double it. And you didn't have to do anything from September of 2012 until May of 2014. So a year and a half of doing nothing. I only buy one stock, Bank of America, on the weekly chart. Okay, fine. 18 months of doing nothing but watching your account double. Pretty sick, right? And then you make a buck or lose a buck, make a buck or lose a buck, because we don't know what the outcome will be at these points. And then you get out of the way and you try it again from August of 2016. Oh my good gravy. Look at this one. August of 2016 all the way to July of 2018. So another 2 years of not doing anything. It goes from $14 to $28. So you watch your account double again, make a buck or lose a buck. Okay. Now you watch it go from $26 to $42. Watch it double again, close to double, right? You just repeat the process. All the while, this guy is waiting to break even. You have more than doubled your account multiple times. More than once, more than twice, more than 3 times, you've watched your account double because the only thing you traded is Bank of America, and you're only trading with a 10 over 20 price over 50 when people are getting more greedy and you get out of the way when it crosses back down. Pretty sick, right? Pretty sick, right? Listen, we're going to give away some free merch here in just a few minutes. Even if you think you've already put in hashtag outlier, you should do it again just to be safe. Just to be safe, like Fat Daddy. Just to be safe. Oh, you could inverse that and go with puts by all means. By all means, if that's what your trading plan entails, you could go and buy puts. For me personally, right now, all I'm doing is holding cash. I'm not going to try and short the market. I'm just going to hold cash.
This group are often sucked up into the hype and enthusiasm, and to compound matters, many of the investors forming part of this group often buy at the top and sell at the bottom.
Yep, this is precisely. Hang on, wait a minute. Oh, that was weird. Hang on. Wait for it. I got a slide for this. Where's my little slide scroller? Oh my gosh. I don't know where my slide scroller went. Wait for it. Here. This is exactly what he's saying. This is where people buy and this is where people sell, right? The market, the herd, right? The real dumb money, not you guys. You guys are outliers, totally different. The real dumb money buys as everything is getting right at the top. And the real dumb money sells right as everything's getting right at the bottom. Right as those moving averages are about to cross. Now listen, I've bought right here as well. In fact, I did it just a couple weeks ago, if you can believe it. But your job is to recognize, oh, wait a minute, something's not working right. It's no longer continuing in this uptrend. It's no longer working like it was. I think, you know what? Let me go ahead and get out. And that is also the difference in smart money and dumb money, is because you can recognize, oh, this isn't working right. Let me get out of the way. These people who bought right here, they won't recognize that. They're going to be going through all these emotions. They're going to be saying all the reasons why it should go back up. Mr. Pohl says, that's exactly what I did. I bought at the 2000 top and sold at the 2002 bottom. Oops. But you learned. Listen, you could not do worse than I did. Okay. You could not do worse than I did. I blew up my account twice, right? You can't do worse than I did, but that doesn't mean you have to stay like that. And that is why I'm so grateful that you and I got to connect today, Mr. Pohl, and everybody else who's watching. All right, let's keep going.
Whereas the smart sell at the top and buy at the bottom. The question is, how do you become a part of this group and not this group? With this theory in mind, let's move back to the Zoom stock chart. The smart investors would have started to invest here, just as price started to move out of its base.
I would imagine your 10 over 20 and price over 50 happened exactly right there.
Institutions would have started to build positions here, and the general public here, also known as the euphoric phase. The same sequence would also happen during the selling process, with the smart investors exiting perhaps here, the institutions would start offloading their stock here, and the public would either sell or hold onto their positions sometime after. Let's look.
And remember, the people who bought in over here are the people who are holding it all the way down. They are terrified because I don't want to be wrong. I can't stomach the fact that I'm going to lose on the trade. It's okay. They can't stomach the fact that they might make a buck or lose a buck because all they can see are how many Lambos they're going to be counting, right? They're counting their Lambos. They're trying to pick out, like, do they want one for every color of the rainbow or just the primary colors, right? They get completely blinded by greed to what is actually happening in front of them.
Look at the extreme case in terms of returns between smart money and the public before we move on to my approach. In the first two groups, we will estimate buy price and sale price. This will clearly be subjective, but will be a typical gauge for comparison.
You know, just because Jack is such a rock star, you can't do worse if you follow what is taught here at Outlier. That's right. We're trying to help you out as much way as possible. Now, people ask, Chris, why do you give everything away like Outlier University? Wait a minute. Did somebody say Outlier University?
Are you ready? Let's go!
Respect is earned. Respect is never given.
I had to do it. No Outlier University classes this week. Now, Outlier University is where we are going to give you everything that you're going to need to be successful. We're going to teach you the mindset. We're going to teach you the strategies. We're going to teach you every single thing you could possibly need to be successful. This goes live every Tuesday and Thursday in the invitation-only live streams. The replays will live on YouTube forever. So for the cost of $3.99, you get to have everything you could possibly want ever to learn how to trade in the market and actually make money. Now, 25% or 50% of you are going to listen one ear and out the other. It's not going to do anything. You're not going to make any changes in your life. 25% of you are going to implement. You're going to break things, and you're going to come back and you're going to say, Chris made me sell my SOFI shares. I'm not going to make you do anything. I'm going to teach you the way the market works. But the other 25% of you are going to listen, you're going to implement, and you're going to create generational wealth in the process. Now, why do we do this? We want you to be successful. We actually do want you to be successful. And then when you're successful, we want you to become an outlier. All right. That's the plan. That is our evil plan, is we want you to be successful and then for you to become an outlier. So let's keep going through here.
Let's assume the average buy price for the smart investor was here at 107, just as the price started to make a clear move above the 20-week moving average, whilst the average sell price was here at 460, after a clear change in momentum. This would provide a great return of approximately 430%. It is also assumed that this smart investor, much like a buy and hold investor, did not use a stop loss. Therefore, the positional risk was 100%. If we divide the 100% positional risk by the return of 430%, we get a return on risk ratio of 1 to 4.3. Next, we look at a typical investor from the public, and we assume an average buy point here, whilst enthusiasm is rising, for an average price of perhaps 320.
And here's the deal. You can make a ton of money by being one of John Q. Public. You absolutely can. When you hear the stories, you see the news, and you get excited, and you see the prices going up, you can make money. But not if you hold it all the way back down. You have to have an exit plan.
The typical investor will keep holding the position despite the fall in price, in denial, whilst hoping the price turns back up.
Okay. I don't know why we're not getting anything over here, but I'm gonna have to start filling in the bingo board. We'll see.
The price continues to fall, and first fear sets in, soon to be followed by panic and eventual stock price capitulation. The investor either sells at the low or merely hangs on in the hope that he will eventually be right. At the current price of one.
Ooh, that's a good point. So in Outlier University last week, we had a guest lecture. We had market wizard Mark Douglas, the author of Trading in the Zone, the trading psychologist, the Trading Psychology Bible. And one part in the video, and for those of you who watch, you can chime in as well. One part in the video, the person who was asking him questions said something about being right, which is exactly what they just mentioned here in the video. You can't approach the market as being right or wrong. Now, I know what you're thinking, but right means I'm winning, wrong means I'm losing. No. There are 4 types of trades: good trades, bad trades, losing trades, and winning trades. A good trade is one where you win or lose, no matter what, because you followed your plan. A bad trade is one, whether you win or lose, where you didn't have a plan at all. Most people only make bad trades because they have no plan. Their plan is, I'm going to buy the stock and then I get to buy a mansion on Thursday, right? That's the plan, right? No, unfortunately not. But to associate right and wrong with the outcome of the trade, and so I love the trading psychology aspect, you could probably tell. Associating right and wrong with the outcome of the trade has no bearing. And the reason being is because the outcome, as we discussed earlier on the Tesla example, the outcome of 3 exact same 10 over 20 price over 50 crosses was vastly different. You had a small win, a break even to a small loss, and a giant win. Now, looking at that, which one of those was the right trade? Let's go back to that example. Do you guys like the psychology part? I love the psychology part. I'm actually curious. Put a T in the chat if you do like trading psychology. Put a F in the chat if you don't like the trading psychology. Right? All 3 of these had the same starting point. All 3 of them had the same entry signal. I'll give you one right now. Entry exit signal. I don't know why this is not getting filled in today. I gave you entry signal. Okay. Which one of these was the right trade? Gary, tell me which one of these was the right trade. Mr. Fat Daddy, tell me which one of these was the right trade. We don't know. We don't know because remember, we are not Nancy Pelosi and we don't get to see the right-hand side of the chart, okay? So when this happens right here, we don't get to see what's on the cloudy side, okay? We don't get to see what's on the cloudy side. We don't get to see what's on the obfuscated side. Only Nancy Pelosi and God know what's about to happen, okay? Only them two. So the answer is, as long as you had, as long as you had a plan, all of them are good trades, but not any of them are right or wrong as long as you have a plan. Exactly, Cameron. Cameron's in his MBA class right now. Exactly, Cameron. If all of them enter with the plan entry signals, that makes it a good trade, not necessarily a right or wrong trade. I'm going to give you something else too, since we're here. Since I've been talking so much about moving averages, let's go. And we got to follow the trend. I mean, elsewise, you're never going to get paid. You're never going to get paid unless you follow the trend. All right, let's keep going.
107, we get a negative return of 66%. And once again, we make the assumption that the general public, whom often class themselves as long-term investors, do not use stop losses. Therefore, 100% of their position is at risk, meaning that we get a return on risk ratio of 1 to 0.66. Clearly, not a sustainable proposition. Can you see that even by using the same...
Oh, Rebrand has a great question. You can have a good plan and a bad plan, right? Yeah. And what's great about times where you're sitting in cash and not effing up is you can evaluate. You can look over the last 6 months and you can say, okay, since I followed my plan over the last 6 months, how did I do? Was this plan working? Now, granted, I saw somebody in our Discord one day. We've put on 3 trades in Plan ETF so far. Plan ETF has like one of the highest expectancies I've ever seen ever. And they're like, I think we need to evaluate Plan ETF. We had 1 small win and 2 small losses so far. So therefore, it's probably not that great of a plan. Yes, 3 trades makes an amazing plan. Now, you got to have hundreds of examples, potentially thousands if you can do the code behind it. But you need at least 50. At least 50. Now, how do you get to a plan? How do you get to a plan? You've got to make sure that you have, first off, rules-based, right? Rules that you can apply to any trade. So first off, like we talk about the 10/20 price over 50, right? That is a rules-based trading plan. That's not the only part of the plan, but that is part of the plan to determine if it's trending up or down. Jawan Hutchinson says, hey, I'm new here. Does this apply if I'm investing long-term or process of daily charts? I'm going to answer that in a moment. So the 10/20 price over 50 shows you where the trend is going. Period, full stop, no matter what. That is the direction the trend is going, but it doesn't always necessarily show how long the trend will go that way. So the plan can be evaluated, right? Maybe you look at this and you're like, you know what? Even though Chris is right, even though the math plays out, what if I use the 8, the 17, and the 42? Oh, you know what? That actually seems to do a little bit better. So we go with that. But having a plan, it means to have rules-based, whatever those rules are. And here's the cool thing about trading psychology. While I give you all the information you need to be successful, because I learned all the wrong ways to not be successful, you don't have to listen to anything that I say. You don't have a boss in the market. There are unlimited opportunities to make unlimited choices in the market every single day. This is a core principle of trading in the zone. Because you can have unlimited opportunities to make unlimited choices every single day, you get to choose what you do. There's nobody saying you got to buy this stock, you got to buy that stock, you got to sell this or sell that. That unlimited freedom causes people to screw up hard because you don't have a boss sitting over your shoulder. Whatever your job is, you probably have a boss or are the boss, and you know exactly what needs to be done. But in trading, there's nobody sitting behind you saying, don't do this, right? You don't have the Grinch right behind you on your shoulder being like, listen, Chris, I know I'm supposed to be the guy that like messes up everything, but in this case, I'm telling you right now, don't buy a stock in the downtrend. Okay. So because of that, you've got to take personal accountability, personal ownership, personal agency, and come up with a plan that works for you. So to answer this question from Joanna Hutchison, I'm just investing long-term is a broken strategy. Joanna Hutchinson, what I would recommend is go back and look at where I talked about Bank of America. And then you can apply the same logic to the Bank of America example as to any stock out there. If you only trade one stock and you only want to trade it long term, you can trade it long term and just capture the up moves without capturing the down moves, and you can watch your account grow exponentially faster than the same person who's in the same stock who doesn't get in and out when the market's working in your favor.
Same stock, the outcomes are completely different. The smart money is risking $1 to make just over $4, and the dumb money is risking $1 to lose over half a dollar. Now let me show you how you can improve.
Scott Raff is here. Everybody say hey to Scott. I love Scott. Scott, I hope you're doing well, my friend.
Further on the smart money returns with my approach. This will give you the basic concept of my strategy that I use and teach without the intricacies. But if you want to learn more, you can always join our group or download the PDF. Okay, let's look at my approach and compare it with the others. The first thing I look for on the weekly chart is a lateral consolidation, closely followed by a breakout.
Stage 1, stage 2. I heard the word breakout. Freaking finally, we get to something on here.
Notice here how price moved laterally without huge volatility for over 16 weeks. This contraction of volatility is like a compression cylinder, and with the right catalyst, it can result in a big move. And the catalyst in this instance,
it can, but it doesn't mean that it will. And this example is going to show a big move, of course, but it can pull up and then pull right back down, and pull up and pull right back down. And that's okay. That's okay.
Was the pandemic and demand for the Zoom product. Price soon moved above the 20-week moving average line, indicating a positive trend, whilst the blue MACD line also rose above the signal line.
So I don't use MACD, and this is why I like to say, come up with your plan, follow that plan. I'm not going to tell you what to put in your plan. But if MACD works for you, go for it. MACD is moving average convergence divergence. Here's the thing. And you're going to love this. When the MACD spreads apart like this, that means it's a moving average divergence, meaning the moving averages are getting farther apart, which is exactly the same as when these moving averages are getting farther apart. So there's nothing magical about a MACD. It just measures the width between two moving averages.
I watch both the 20-week moving average and MACD indicators closely.
You know what? He's talking about trading what you see right there. He absolutely said trade what you see, and he's going to be following a plan to get to that point.
My entry point would be at the break of consolidation, but
entry signal, I already got that.
Before entering the trade, we need to determine our risk. We need a stake in the ground, which
risk. Is there a risk on here? Reduce risk. Oh, here we go. Now we're finally filling up the bingo board. Let's go. Don't forget, we will be giving away all kinds of outlier merch, but you got to put hashtag outlier in the chat. Like half of you have not put in hashtag outlier. I guess half of you don't want to win, but whatever.
Finds a price point in which we must close the position. This is the key divide between smart and dumb money versus my approach.
Absolutely. Must close the position means you got to cut your losses. Here we go. Now we're going.
I would place a stop loss order somewhere in consolidation. And for ease of calculation, we will assume it to be 10% of position size. Therefore, should price fall back into consolidation instead of continuing its trajectory upwards, we would lose a maximum 10% of the trade instead of all of our money, should the stock immediately capitulate.
Yep. So looking at this, right? Nicholas Darvis was in the 1950s. He wrote a book called How I Made $2 Million in the Stock Market. And he did something very similar. He drew what's called Darvis boxes. Now, a Darvis box is any box you want to put on. Okay. There's no set dollar amount to what that box is. And if it popped out of that Darvis box, he would buy it. Okay. And then as it grew, he would hold it. And then he would move up to a new box and he'd move up to a new box. Okay. Almost as if he's following the trend. Almost if he's looking for higher highs. Okay. But if it did come back down, came out of the new box back into the old box, like the arrow suggests right here, that would be his stop loss, using a stop loss. I'm giving you all the circles over here, using a stop loss. Okay. This was found in the 1950s, and he found this while trading by telegraph. I've never even seen a telegraph. Bro made $2 million on the opposite end of the world. His actual day job was a dancer. So he was up on the stage shaking his booty, yet making $2 million in the 1950s by following trends higher. He was buying stocks as they were crashing up and not buying stocks as they were crashing down. The same principles apply today. They are timeless because they work. Timeless because they work.
Right. So far,
G1, fine, Manny. God, Manny's so bossy. Manny's so bossy. Use a high probability. Wait a minute. You just thought, oh, daggum. I read that as 01. Oh, well, I'll give you that one too, Manny. Just for you, my friend.
we identified consolidation. We saw a breakout based on a reasonable narrative, which took price above the 20-week moving average in alignment to the positive MACD, and we defined our risk. Next, we need a rule to exit the position. There are a few trains of thought when...
What do you mean exit the position? I'm going to hold this forever. And not to come at Mr. Hutchinson from earlier, but this is most people, okay, Mr. Hutchinson, not you. I'm a long-term investor. I'm going to hold this forever. I believe in the company. I love the product. I know their CEO is doing a great job. SOFI shares. It's the future of finance. Nah. All that stupid shit, right? You don't have to worry about that. And you don't have to predict anything. All you have to do is follow your plan. Don't buy the dip and wait in cash until you see what your plan needs to see. I just gave you like 4 squares right here, by the way. All you have to do is wait in cash until you see the part of the plan you need to see. I'm just telling you right now, it is Thanksgiving week. And this is the only bingo that's happening this week. This is the only day this week that I'm giving anything away. So if we happen to get a blackout, don't be surprised.
Exiting a position, and you could sell into strength, sell at the first sign of trouble, or my approach, which is the confirmation that the trend has in fact changed direction.
He said confirmation of a trend. Oh, snap. Oh, snap. Let me get my bullhorn. Hopefully I don't wake up my family. Well, it's like 8:45. They should be up by now anyway. Oh, snap. Did he just say wait for confirmation? I think he just did.
Let's go, baby. First bingo on the board.
There we go. We got the first bingo on the board right there. Oh, this is going to be a good day.
There are a number of ways to suggest a change in trend. Again,
you can't win unless you put #outlier in the chat. But, isn't this so fun? We get to learn, we get to vibe, we get to give away prizes, all for free. Right? We want you to be successful. Okay? We want to trade with you and make money with you, not make money from you, where people charge tens of thousands of dollars to do exactly what we give away for free.
I rely on either the 20-week moving average line, the MACD, or a combination of both. In this example, we will assume the crossing of the MACD line to be the signal to close the position. And
remember, this moving average convergence divergence, when they cross back down, means the moving averages have crossed back down. It is not magical. Moving average convergence divergence. When they cross under right here, it is the same thing as if your moving averages cross under. It's not magical.
Being too precise, let's assume we sell in this area just after the MACD.
Sorge has a great question. Any Black Friday outlier discounts? Freaking yeah. Don't you know that the annual pass is 64% off the regular monthly price? What an amazing deal that is happening right now on Black Friday week. And you could probably get it any other week as well. I'm just saying.
Line crossed down. We can now look at the metrics of the trades to make a comparison. We bought at the breakout at the close of that breakout candle. The buy price was therefore $88. Our exit price would have been in the region of $405, providing an absolute return of 360%. However, the important comparative metric is the return on risk. So we need to know the risk at stake to obtain that return. We already established that our maximum risk was 10% based on the stop loss order, and we can therefore calculate our return on risk is 1 to 36. Therefore,
1 to 36. Now that right there is a pretty sweet return on risk.
We risked $1 to return $36. A huge difference to the previous examples. But the story does not end here. Let's pull this data together and show how each approach, combined with leverage, changes the dynamics even further.
Leverage, baby. That's where I live.
On one end of the scale, we have the dumb money, or general public.
Now, again, you are not allowed, as an outlier, you are not allowed to feel as if you are the dumb money. No, I can't stand that. The idea that you are not smart enough to beat the market, you got to settle with the 6 to 8% per year returns forever. That's what your life is going to be. Just deal with it. No. I cannot stand that. I don't know. There's something in my DNA where if I feel that there's a gatekeeper holding me or you back from something, it just grinds my gears so hard. It's like, how dare you? How dare you call me dumb money? Let me show you how it's done. That's how I feel.
They bought late in the cycle in the height of enthusiasm, got greedy, and held on in denial until price capitulated, and this resulted in a loss of 66% of their money. And to get this return, they put 100% of their capital at risk by not applying risk management in the form of a stop loss. Their risk reward therefore equated to 1 to 0.66. We assume a $5,000 investment, and because 100% of this is at risk due to zero risk management, I also assume, and advise for that matter, that no leverage is applied. Leverage on any singular stock trade without a stop loss or a strict form of risk management is a definite no-no. The outcome for this trader was a loss of $3,300, and had they used a 2-to-1 leverage factor, this would have doubled the loss to $6,600, more than their deposit. Next, we have the smart money. This group managed to buy on confirmation of price rising out of its base, way before prices got artificially inflated through.
No, it sounds like Todd actually needs to sell his SOFI shares. Oh, the irony, Todd. I'm here for you, dude, though.
Dumb money. They exited somewhere close to the top at the first sign of buying exhaustion.
Well, let's take a look at SOFI, right? Let's pop into SOFI and actually take a look at it. Why not? Todd, do me a favor. I'm actually curious at this point, Todd, and we're not going to judge you at all. And I'm not being sarcastic. We're not going to judge you at all. Why did you buy into SOFI? What got you into SOFI? What got you into SOFI? I'm very curious about that. Was it the SOFI bros on the YouTube saying this is the future of finance? Were you seeing the price of SOFI going up, right? And you were like, oh, I got to get in on it. I got to get in on it. Oh, I did it again. Hang on. I want to see my market cycle chart again. And I'm not blaming you, dude, right? That's exactly what it looks like, right? The stage 2 uptrend right there. But it also has gone down 50%. Let's see if Todd's replied. Okay, I didn't see that Todd's reply, and that's okay. All right, oh, frick, I did it again. Anyways, right here, this is exactly what we see. Exactly what we see. The 10 is under the 20, price is under the 50. This is now in a downtrend. Okay, this is stage 3 habits right here. Stage 1 started over here, ran like crazy because we don't know the outcome of what stage 1 will end up. Stage 3 is happening as we speak, and the stage 2 did its thing. The stage 2 did a big, beautiful thing. And now it's got its stage 3. If we go into SOFI, it's got a sell signal that happened on Friday, November 7th. Let's go to November 7th real quick. Here, that was your sell signal. Hang on. Porterhouse said, I did the same thing. SOFI bros and selling options. I know better now. Well, listen, it's only because I laid on the barbed wire, and I'm telling you not to repeat my mistake. So I'm actually glad that you're listening, right? Mike says, it's okay, Todd. We're the only ones that lost money on NVIDIA. Yeah, I know, right? Truther said, I almost jumped in on SOFI because the YouTube bros. Chris saved him, yeah. SOFI 1, 2, SOFI is coming for you. 3, 4, Felix is knocking at the door. 5, 6, don't let the FOMO in. 7, 8, Chris made me sell my SOFI shares. 9, 10, full ported and YOLO'd again. Yeah, and here's the thing. All stocks are bad, including SOFI, and the SOFI bros are going to come for this. All stocks are bad, even SOFI, and every once in a while they act right. Every once in a while they act right. And it was absolutely acting right. It was gone crazy, right? From the buy signals that came along the way to the sell signal that's happening right now. Acted right for a long, long time. And now it's time to get out because we don't know how much farther down this trend is going to go. But it's up 3.69% today, Chris. You're wrong. Okay. You're wrong. That's fine. Or I'm wrong. That's fine. But I do know that the trend is going down, and it certainly looks like a bearish trend starting right here.
This resulted in a return of 430%. But remember, this group also did not use a stop loss order and therefore assumed a risk of 100%, which equated to a return on risk ratio of 1 to 4.3, risking $1 to make just over 4. They also invested $5,000, used zero leverage, and managed to achieve a profit.
Todd stepped away for a minute. First off, Todd, you're not allowed to step away. When the live stream is live, you are required to listen the entire time. There's no excuses for stepping away, okay? But the question was, what got you excited about SOFI? Since you mentioned it, what got you excited about it?
Of $16,500. Next, we have my approach, which had a 360% return. Although instead of risking 100% like the investors above, we used a stop loss, limiting our risk to 10% and providing a risk on return ratio of 1 to 36. Now this is where the impact of leverage becomes a key factor.
So what else is a key factor? Since you mentioned key factors, like Charlotte's saying here, she paid $6,500 for someone to teach her the bad habits. Now she's paying $0 to be taught the great habits. Charlotte's one of our Bravo students. And that's the deal, right? It's either, and it's very obvious the type of business mentality these people have. It's either we want to make money from you, $6,500, or we want to make money with you, 82 cents a day. Everything's included. There is no upsells. I don't know.
We deposited the same $5,000 as the other traders, but only 10% of this amount was at risk, equating to $500. And with this $500 risk in mind, we can comfortably apply a leverage factor of 2 to 1, meaning we are now multiplying the risk of $500 by 2, but equally multiplying the position size and total return by 2. The profit on this trade now becomes $26,000.
Now that's the power of leverage when you understand how to use it correctly. So this is great. So going over to the bingo board real quick, let's see what things we need to get onto here for Thanksgiving week. Remember, hashtag outlier in the chat if you want to win. There's no way you can win unless you put hashtag outlier. And just to be safe, because I don't know if it picked up your entry earlier, you should definitely type hashtag outlier again. Just to be safe. I mean, I wouldn't risk it. I wouldn't risk it. Let's see. I think that if you want to find, I'm gonna need y'all's help, by the way. If you want to find good stocks that actually are acting right, you want to have a market that's working for you and a sector that's working for you. And if the sector is working for you, that sector's got to have strong breadth, and then your stock has to be one of those in the sector that is working for you. Oh, how about that? And then it's got to have the momentum. I mean, while it can go higher without momentum, it sure makes life a lot easier to be buying into a stock that already has momentum at its back, right? And if you want to pyramid into positions, it's something I did for a long time. I don't do it anymore, but you could add to winners, right? Because winners average winners, losers average losers. Oh, snap, we got another bingo. Oh, snap, we got another bingo.
2 bingos. Let's see how many we can get.
And then, I think I said this earlier. You got to let winners run. Oh, there's a third bingo and a fourth bingo. Oh my goodness. And you need to have the consistency and discipline to do the plan. So there's one right there. Oh no, another bingo. Oh, this is going to cost us so much money today. Oh, we should have charged y'all $6,500 to watch this video, because we're going to be spending probably $6,500 in merch. Oh man, how many bingos are we up to now? I don't know. But the only way that you're going to learn is by journaling the trades so that you can figure out exactly what it's going to take to be successful, right? With those winning trades and losing trades. So that's going to get you another bingo. And then you got to have the right mindset. You got to have the right mindset, because if you don't have the right mindset to be successful, it's never going to happen. As much as you could have the right trading strategy, if you don't have a winning mindset, you will continuously lose, period, full stop, no matter what. But I think we're going to leave one square blank. Think we'll leave one square blank. How many bingos does that get us to? How many? Count them up for me. I can't count that high. My itty bitty baby brain doesn't work that well. So 1, 2, 3, 4, 5, 6, 7, 8, 9. I think we're at 9. I think we're at 9. We're at 10. Are we at 10? I think we're at 9. I think we're at 9. Paul says we're at 11. Rick's trying to do it, but it ain't gonna work, Rick. Because I'm teasing you guys out. Don't you understand? We're at 10, 12. Let's go, hammered ninja donkey. I think we're at 10. 10. I think we've all agreed on 10. I think we're all at 10. Okay. That's a nice round number. It's almost like we could trump that number with 11. Booyah, baby! 11 bingos. You didn't see that one coming, did you?
11 bingos. 11 bingos.
Wait, doesn't Trump get his own bingo?
12 bingos.
Okay. All right, fine. We have blacked out the board today. Y'all are you're going to win so much. You're going to get tired of winning. I have to give away 12 prizes. 12 prizes. It is going to bankrupt Outlier. We're going to give away so many prizes today. Give me just a second here. I am going to write an email to April, and we're going to start 12 bingos for Monday. And so who's going to be our first winner? You got to put hashtag Outlier in the chat to be a winner. Let me pull up the merch wheel of fortune. Here we go. 12 bingos today. This is an obnoxious amount of bingos, but it's also Thanksgiving week. So how's that sound? 12 bingos. 12 bingos. Okay. Let's see who our first winner is. Draw, baby, draw. Who's our first of 12 winners? Let's see. Lucky Chevy. All right. Lucky Chevy 430 is our first winner. Let's see what the Lucky Chevy has won. You need to set your fence post today. If you don't set your fence post today, you're in trouble. Let's see what Lucky Chevy has won. Lucky Chevy's won a sit in cash and don't F up t-shirt. That's awesome. Let's go to the shop real quick so you can see what that looks like. Lucky Chevy. Let's see what Lucky Chevy's won. A sit in cash and don't F up t-shirt. Where's that at? Where is that at? Did I pass it? There's a no. There it is. Sit in cash and don't F up t-shirt. I love it. Hang on. I got to write all these down. Sit in cash and don't F up t-shirt. Now, to claim your prizes, for those of you who don't know, send an email in to April, support@outlier.com, and she will ship out the prizes to you. She's going to double check that you are this person, that you get that prize, and she will send it to you. So who's the next winner? 12 winners to give away today. We have 11 to go. This is crazy. It is 123 Lego Studios. How great, 123 Lego Studios. Congratulations to you. Let me put that over here in my email to April. Let's see what 123 Lego Studios has won. 123 Lego Studios has won. Let's see. An 80 Delta, although it's spelled wrong, an 80 Delat polo shirt. Ooh, an 80 Delta polo. I don't think we've given one of these away yet. Let's go look at an 80 Delta polo shirt. Where are those at? 80 Delta. Here we go. 80 Delta polo shirt. Very cool. I love it. 80 Delta polo shirt for you, 123 Lego Studios. All right, 2 down, 10 to go. 10 to go. Let's see who's next. By the way, this is our Outlier Thanksgiving special. That's why I'm giving it all away. Ready, Tom? Mott I Der Tomared. There we go, Tomared. Let's see what Tomared's won. Tomared is won the Hey, there he is right there. Reddit Tomared, all the above. He's won a $10 merch credit. All right, $10 merch credit for you. Now, there's all kinds of cool stuff you can buy with the $10 merch credit, by the way. And whenever you go checkout, use not hashtag, but just use Outlier, OVTLYR at checkout. You can get an 80 Delta mug for free. You can get a 80 Delta koozie plus a Outlier flag koozie for free by doing that. Yeah, all kinds of cool stuff. We have priced everything at the very lowest possible price, and then you can use the vendor has like cost plus 20%. That's how it works. And so what our loophole was, because we don't want to make money on this. Our goal is not to make money on merch. What our loophole we found was we could use a discount code still. So when you go to checkout, use outlier, not hashtag, just outlier chat at checkout, and it'll give you 10% off, which makes your total price cost plus 8%. So we have loopholed around how low we could charge everything. So pretty cool, right? Let's see who the next winner is. Reddit Tom with this $10 merch credit. So that's 3 winners so far. And Tyson. Oh, hey, Tyson. Congratulations. I've met Tyson in real life. The first ever outlier meetup at a Lowe's store where my son was selling popcorn. I got to meet Tyson there. Tyson, congratulations to you. Let's see what Tyson's won. Let's see what Tyson's won. Hell yeah. Let's go, Tyson. Tyson's won a $10 merch credit as well. Awesome. $10 merch credit for Tyson. All right, let's see who the next winner is. So many winners today. You're going to win so much, you're going to get tired of winning. So we're at 1, 2, 3, 4 up to Tyson. Let's see who the next winner is. Dr. J. Dr. J has won this multiple times. Dr. J is a winner in life, in trading, and an outlier. Dr. J is our 5th winner of the day. Let's see what Dr. J has won. Dr. J. Dr. J, Mahesh is not happy with me. No, I think Mahesh would be happy with me because he knows what we're doing over here. Dr. J's got an 80 Delta beanie. Keep your head nice and warm over the winter. 80 Delta beanie. Keep your head nice and warm. Hang on. Does Dr. J have a bald head? I'm curious now. He might have a very short haircut. It's very difficult to tell, but he might really enjoy it. Based on what I can see right here, based on my assumptions, I'm writing a prescription for Dr. J to have an 80 Delta beanie. No bald head, though. No bald head. But either way, you're going to be nice and toasty, my friend. Nice and toasty, my friend. All right, let's keep going. Let's see who the next winner is. Let's see who the next winner is. But he does have about 80% of his hair. Shut up, Dr. J, making me feel bad about myself. It's Gregory C 4644. Gregory C 4644. Our next winner here. All right. I have absolutely lost count over here of how many winners we have. And let's see what Gregory C 4644 has won. Let's see. Let's see. Yeah, Gregory C has won a Outlier Flag koozie. Outlier Flag koozie. So going way back to what I talked about earlier with the giveaways on my wife using the Whatnot app, I was like, when we do the giveaways, you get to win. We get the spin to win the name, and then you get to spin to win the merch Wheel of Fortune. And I think that makes it like double fun. So we've got 1, 2, 3, 4, 5, 6. Gregory is number 6 with this Outlier Flag koozie. All right, let's keep going here. We're winning so much, we're getting tired of winning. Winning so much, we're getting tired of winning. Keep going till I win, says Mike. Stephen T. Oh, don't do this to me. Don't do this to me, Stephen to 40. Stephen to 40. Okay, we got to figure out what is this trying to say here. Stephen 40. 40? Stephen's 40. Stephen is 40. Stephen 40. All right, Stephen 40. Stephen 40 is our number 7 winner. Stephen 40 has won. Let's see what Stephen 40's won. Stephen 40. Yeah. I think we're there. There's Stephen 40 right there. Stephen is 40. Stephen is winning an 80 Delta jacket. Dude, I'm actually going to order one of those. I need one of those. Let's go look at this 80 Delta jacket because that is a good prize right there. 80 Delta jacket with the big logo. Look at that. I can't wait for Stephen to be strutting around. Stephen, he's going to be 40, and people are going to walk up and they're going to be like, I thought you were Stephen 40, not Stephen 80. And he's going to be like, no. This random guy on the internet sent me an 80 Delta hoodie. So I'm now Stephen 80. Stephen 80 is the plan. Stephen Forte. Oh, Forte. I like that. But now it's Stephen 8. Stephen 8. That's the plan, Stephen. So he's got a 80 Delta jacket headed his way for Stephen 8. All right, Stephen, congratulations to you, my friend. Let's keep going. I think we're at number 8. I think random guy's name changed. Now it's G3004. I love this channel. I love you too. Sergey Plotnikov. Sounds like he's the bad guy in a James Bond movie. Do James Bond names get any more obvious than Plotnikov? Like he's going to plot to be a bad guy in the James Bond movies, like Octopussy, What are some of the other names in James Bond movies that like they're so obvious and ridiculous? Jaws, Odd Job. Yeah. Plotnikov sounds like you're a Bond villain, but I think you're a good guy because you're an outlier, Mr. Plotnikov. Let's see. He's a spy. Let's see. Plotnikov is one. A monkey hammer coffee mug. Monkey hammer coffee mug. So while he's plotting to overthrow James Bond and hack the outlier servers, he can be drinking from that monkey hammer coffee mug. How many winners are we up to so far? I have to count. Lucky Chevy, Lego Studios, Reddit Tom, Tyson Finley, Dr. J, Gregory C, Stephen 80, Stephen 40 / Stephen 80, and then Sergey Plotnikov. We're up to 8. 8 winners. So we still have 4 winners to go. Let's do this thing. Dr. No. Yeah, exactly. Let's go. Mr. Plotnikov, congratulations to you, Sergey. Let's keep going. We have 4 more. 4 more winners. Eric. I am the great Eric Cornholio. Eric the Cornholio. Let's see what Eric the Cornholio has won. Eric, why? Why, Eric? Why? Don sipping from his Monkey Hammer mug right now on the bridge of the Red October. Perfect. Monkey Hammer coffee mug again for Mr. Cornholio. Eric the Cornholio. Francisco Scaramanga. I think he had like a golden gun or something, didn't he? Another Monkey Hammer coffee mug. That'll help with his Cornholio. Yes. I need TP for my Cornholio. Or for my bunghole. All right. Okay. I have to double count. I've actually lost track at this point. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. 3 more. Let's go. Let's see. 3 more winners. Who's it going to be? Chew Dog. Crew Dog. 135E. What's up, Crew Dog? Flying the skies. Crew Dog. 135E. Let's see what the Crew Dog has won. Crew Dog 135E. As one, a Monkey Hammer koozie. There you go. So while you're flying from place to place, you can use your Monkey Hammer koozie to keep your Coke Zero nice and cold. Congratulations to you, Crew Dog. We have 2 more winners. 2 more. Final 2, last 2. Best 2, last 2. Let's go. Best 2, last 2. Let's go. Let's see. Jarretton. No, it's Jarrett 10, right? Like there's Jarrett 10. Yeah, it's got to be that. Jarrett 10. Let's go, Jarrett 10. All right, Jarrett 10 is number 11. We're winning so much, you're getting tired of winning. You've already clicked off this video because it's so boring with all these winnings. Jarrett 10 has won a slingshot water bottle. That's the first water bottle we've given away, I think. Slingshot water bottle. Congratulations to you, Jarrett 10. And our final giveaway winner, our last giveaway winner for Big Money Bingo on a shortened Thanksgiving week is... Mike says, I suck at this game. Let's see who the last one. Ween No FOMO. All right, Ween No FOMO. Congratulations to you with he is the chief monkey with a hammer right here. Mr. Ween No FOMO, our final winner of the day. Huge dozen winners. Let's see what Ween No FOMO has won. Ween No FOMO. No FOMO. Wow, finally. Yeah, let's go. An 80 Delta jacket. Outstanding. Man, I got to get one of those. 80 Delta jacket for Ween No FOMO. 80 Delta jacket. All right. So to recap, Lucky Chevy, 123 Lego Studios, Reddit Tom, Tyson Finley, Dr. J, Gregory C, Stephen 80, Sergey Plotnikov, Eric H, Crew Dog, Jarrett 10, and we know FOMO. Yes, we got 12. We did it. We got to 12 winners. Congratulations to all of you. Again, to claim your prize, you must email in support@outlier.com. Give us your name and address, because I'm sure that it's not going to go to we know FOMO at PO Box 1469, right? We know FOMO and everybody, and Tyson and all of you guys. Thank you so much for coming today. I love hanging out with you guys, especially on a short Thanksgiving week. Have a fantastic day. And if you're looking to save time, make money, start winning with less risk, click one of these two videos. We'll talk soon.